Tata Motors skids more than 7% on the back of a weak quarter. The margins miss estimate despite the PLI benefits. Brokerage firms Jefferies and UBS issue bearish calls on the stock. Meanwhile, CLSA has an outperform rating.
Bajaj Finance, on the other hand, climbs more than 3% after reporting numbers in the third quarter that were above estimates. Deposits rise nearly 19% on a year-on-year basis. Management in the conference call guides for AUM growth of 25% in the next financial year.
Whirlpool tanks after its parent Whirlpool Corp announces that they plan to trim stake in the company further to around 20% by mid or end of this year.
Voltas slips more than 11% on the back of its third quarter numbers. The earnings miss estimates largely due to lower unitary cooling product margins.
Hitachi Energy rallies 20% on the back of a solid showing in the third quarter. The revenues are up by 27% on a year-on-year basis. The margins expand as well. The management tells CNBC-TV18 that they endeavor to improve margins on a sequential basis, and they are due to receive some HDVC orders as well. Hello and welcome to Chartbusters. I'm Nigel. With me is Mangalam. And as we speak, the market's at the high point of the day. So no worries on the headline index. The Nifty Bank is well up close to around 200 points. I'll tell you what, the Nifty Bank is holding above the 20 DMA. The Nifty is getting very, very close to that 20 DMA. And we had Rahul Sharma a couple of sessions ago who said he's expecting more than a 1,000-point rally. Guess what? From that day onwards, in fact, we've already seen 500 points out, so maybe we'll get Rahul to revisit that call out there. But it was a brave call, Mangalam, and it seems to be working at least as of now.
A brave call indeed, and we're going into important events as well over the next couple of days. So we'll keep an eye out on how this pans out. Meanwhile, a bunch of stocks doing extremely well as well. From the broader markets, the mid-cap index is outpacing the frontline indices over the last couple of trading sessions. That telling you about the confidence, though we've seen some bit of profit booking from the highs on that index itself. We'll do one thing. We'll take a short break, come back on the other side. We'll get you a lot of corporate conversation, starting with excerpts of our conversation with Rahul Bharti, who's the Executive Director of Corporate Affairs of Maruti Suzuki India. Stay tuned.
Welcome back. Well, Jindal Stainless reported a more or less inline set of numbers. In fact, from the lows of the day, the stock has recovered considerably. It's up close to around 7% from the lows of the day. To understand what's the way ahead, we're joined by Mr. Anurag Mantri, the Group CFO and Executive Director of the company. Hi, Mr. Mantri. Good morning. Always a pleasure to have you on the show. Let's get two big numbers out of the way. You started the year hoping for volume growth of around 20%, which was scaled down to around 10 to around 15% or thereabouts. Now you're in high single digits at around 8%. What do you end this year with in terms of volumes? And consolidated EBITDA, I see, is at around 20,000 rupees per ton. You hold on to this. Will it get better?
So, good morning, Nigel. So, like as you said, the volume guidance, what we are expecting this year to close at around close to 9%, which is around 2.35 or 2.36 sort of million ton number. This is primarily because of, and this is still almost a 95% achievement, what we said earlier, despite our export market didn't pick up and there is a continuous dumping happening in the domestic market. On EBITDA guidance side, still we are holding to a consolidated EBITDA guidance of around 20,000 to end the year with, which include the JSL and JUSL combined EBITDA per ton. Which we were expecting to move towards 21,000, but still we'll be able to close the year with the 20,000 plus sort of the EBITDA per ton guidance. So we are more or less, despite the challenging market, on track in terms of balancing our volumes and EBITDA earnings.
So now you'll grow by 9% for this fiscal year, and your EBITDA per ton will be at around 20,000 rupees per ton. Are we getting that correct?
Yes.
And for the following year on this low base, FY26, will things improve? And also your export contribution, will it go up?
So, next year, at least volume side, we are hoping that we should be moved to again back to a double-digit territory. So, if you see last 2 years, if I take this year of 9%, but the previous year we delivered 23%. So, CAGR-wise, we are still delivering 16% growth in last 2 years. Next year, we are hoping to move to a double-digit sort of number next year from this base. Now, it's a bit early to give the exact guidance on the EBITDA and this because there are two factors to watch carefully. One is that what's happening in the US, which is our key export market, and we'll have to watch for how the US market evolving. We are so besides, I'm not keeping aside the tariff part, which we will come to know within few days. But otherwise, we expect with Trump coming, there should be a push on the infra, and we should be getting a better traction in the market. We have already also what we as a US strategy, we started pushing the value-added product in the US market. So we are already seeing a good traction on our US order book in last quarter. So last quarter three, we saw a good traction as compared to the quarter two, almost 1.5x of the increase in our US order book. And if the Trump pushes the infra development, I think that should give a good foray into this. Obviously, that the tariff have to be watched for, because if they put up a high tariff, though we still have a 25% tariff. So right now they have been saying only for Mexico and Canada. So we are hopeful that India should be insulated, but let's see, we'll have to watch that factor. And second is that on the domestic market, the continuous dumping in China. So our request, already there is a petition filed with DGTR for 25% safeguard duty, which we expect, we hope that the government should take cognizance of.
All right, we take that point. Hi, Mr. Mantri. Just a couple of questions from my end. I just wanted to know your outlook on debt from here on. Close to around 1684 crores is your net debt as of December. Where does this number go over the next couple of years? What's your cost of finance here? And club that with capex as well. What's needed over the next couple of years?
So our capex, currently running capex, what we said is this year we said our capex spend should be around 5,500 crore. There could be some spillover, but more or less because some of the capex we may defer to next year. But more or less, most of the capex almost were related to the acquisition of our NPI, our acquisition of Chromeni assets, which we acquired. Also the melt shop capacity, which we are putting up in Indonesia with joint venture. So those capexes were committed capex, and those are already have been spent. So with this, what our guidance, if you recall, Mangalam, we said that this year we will be ending with around close to 5,500 crore of debt. Despite the lower number of the volume growth, we expect that we will still be in this range and maybe some better than this range. So we expect the debt to reduce from our previous guidance slightly better than the previous guidance. And the next year capex, what we have planned right now, as per the planned capex, is around 1,800 crore, and plus any of the spillover capex which goes from this year.
Okay, 1,800 crore for next year, and for this year, I'd missed that number. What is the capex?
This year, our guidance is right now 5,500 crore of the capex spent. Mostly, I think we may be lower than this, because we may get some of the capex may get deferred to next year. But most of the capex have been spent. So I think 90% capex should be spent in this year itself.
Got it. All right. And your debt will peak out at 5,500 crores. Are we getting that correct?
5,500 crore. We will try to do better than that, I think. But the guidance for the year end is 5,500.
The big focus is going to be budget 2025. And Mr. Mantri, you briefly mentioned that imports also are worrying you. In the export market as well, there's uncertainty. So what is your plea? I missed that number. What is the current duty in place? And where do you see that duty headed to?
So budget, our key request is that the basic custom duty on the non-FTA countries is currently 7.5%. So our recommendation is to increase to 15%. So at least level playing field is established for the domestic player from non-FTA countries specifically. This is beside the separately the database safeguard duty, which has been requested for 25%. Plus our second request is on the continuation of especially the moly and the graphite electrode to reduce the duty on that, because that's the graphite electrodes are the key for the electric arc furnace based production. So we are requested to government to reduce the duty on the electric graphite electrodes imports in the country.
For the year, you've given a 20,000 crore EBITDA target, which includes JUSL. Specifically for JUSL, what is EBITDA likely to be this year and next?
So JUSL typically runs in a absolute EBITDA terms close to 700 plus to 750 crore sort of range. So we are expecting JUSL to continue delivering those numbers. Therefore, if you see on a consolidated basis, broadly, if in a per ton I convert it, it will always remain 3,000 ton plus 3,000 ton, and the positive side of 3,000 ton per metric ton. That's why I'm saying so totally we should be able to still deliver 20,000 EBITDA per ton of the numbers for this year.
Got it. Appreciate you joining in, Mr. Mantri. Thanks a lot for joining in. As we said earlier, the stock has seen a good recovery, factoring in a better performance in FY26. We'll slip into a short break, come back, we'll be joined by a couple of managements. Don't go anywhere.
Welcome back. Let's talk about Maruti. The stock is in focus on the back of their numbers. They were in line with estimates. The management commentary is what's pressurizing the stock. Parikshit Ludra spoke to the management, and here's what they had to say.
We've just taken a price increase, a minor price increase. We had to pass on some inflationary pressure to the market, which our cost reduction could not take care of. So our effort would, of course, be always to make our prices more comfortable for the consumers.
Right. And going forward, what are the factors which are impacting margins right now? Would there be an urge to increase prices again?
If there are inflationary pressures, we'll have to take stock of them. Whatever is not possible to offset through in-house cost reduction, we will have to pass on in a very calibrated manner to the market. Of course, we would never like that to happen, but sometimes pressures need to be passed on. So in this quarter, we had higher sales promotion, 20 basis points, higher advertisement also 40 basis points. There was adverse forex of 20 basis points. Depreciation of some of the facilities of the Kharkhoda plant set in by 20 basis points. Of course, we had positive factors also, like commodity favorable by about 40 basis points. We had operating leverage because of good volume growth by 30 basis points. Going forward, it is uncertain. Commodities and forex always determine our margins, but the biggest margin comes from volumes. And for volumes, we will have to get into newer segments, like more launches in SUVs, and maybe increase our exports big time.
Going forward, what is the kind of export growth you expect?
So this financial year, we hope to do more than 3 lakhs for sure. And we want to take it up to something like 7.5 to 8 lakhs by the turn of the decade. And what will be very helpful will be the e-Vitara exports to about 100 countries of the world, including in Europe and in Japan.
Okay, all right, let's get straight to our next management. IMFA, Indian Metal and Ferroalloys, the company reported a wicked set of numbers. It seems the street wanted something more as well in those numbers, because from yesterday till today, the stock price has corrected close to around 15%. But we have the main man with us, Mr. Subrakant Panda, the managing director of the company. Hi, Mr. Panda. Good morning and good to see you. And as always, before we get to the numbers, the street seems to be speculating there's something more on the cards with regard to a corporate action. So could I ask you about that? Is there any inorganic opportunity that IMFA is looking at? Currently, your capacity is 2.5 lakh tons. Organically, you're going to 3.5 lakh tons. But the street seems to suggest maybe there are a couple of assets. Maybe Tata Steel's asset is what you're looking at as well. Can you clarify?
Good morning, Nigel. So as you would know, it's not possible for me to comment on rumors. And, that's the problem with street expectations that, when something goes around, it's a little difficult for us. But be rest assured that, as and when there is something reportable, we certainly do that at all points in time. What we are focusing on at the moment, as you mentioned, is our organic growth. We are expecting to start construction on our phase 1 expansion from next month, and have that commissioned in the first quarter of FY27, which is the April to June quarter of 2026. We are also starting work on our ethanol project soon, and that will also be commissioned by the end of this year, or spilling over maybe into January next year. And we have in principle approval for our phase 2 expansion. So one way or the other, we are going to grow. And of course, we remain open to opportunities, but nothing that I can specifically comment on at this point in time.
Are you actively pursuing anything?
Sorry, I couldn't hear you.
Are you actively pursuing anything, Mr. Panda?
as we are actively pursuing growth for sure.
So the growth would include some inorganic growth as well, because we understand Tata Steel has shut down one part of their unit, and it could, at least from an analyst perspective, it makes, fundamental sense that Infra could look at that asset. So if it is on the block, part of that ferrochrome business of theirs, will you be interested?
So as I said, let me reiterate that, we are clearly pursuing growth. I think we are primed for growth. And we are going to get there one way or the other, whether it is organic growth, where phase one is being executed and phase two is on the cards. And if any other opportunity comes along, we certainly remain interested. But I think, it's not proper for me to comment on specifics when there is, nothing specific to talk about.
Right. We understand that there is nothing specific, but what we also want to understand is at what stage of pursuing this growth, the other way, are you at right now? You said one way or the other includes organic. There is, chatter around something happening. We just want to understand your thoughts as to how advanced those stages are when it comes to any sort of, deal or any growth opportunity that you would get on an inorganic basis.
We can go at it from several angles, but the answer remains the same, which is that we are pursuing growth. And as and when there is something to be reported, we will. As of now, there is nothing that requires to be reported. But if that were to happen, we would certainly, come out and you'd be one of the first to know. But either which way, next year, we are going to be up 40% in terms of capacity. And, if we pursue organically, then another 2 to 2.5 years, another 50% growth. So that visibility is there about our growth plans. And we always remain open to opportunities.
Got it. So by the end of 2026 calendar year, your capacity will be up by 40%. And say by the end of 2028, your capacity could be closer to around 400,000 or maybe 450,000. Should that be an aspiration? 450,000 to 500,000 actually.
That's not just the aspiration, but a very clear, plan of action in place. So, it's a question of whether that can be accelerated in some manner. But either which way, we are certainly getting close to 500,000 tons in the not too distant future.
And as of now, you're talking about this by 2028, it will be organically, the 500,000 tons.
That's right.
And then we'll have to quiz you whether or not you go even more than that, Mr. Panda. We'll wait by for that. Let's take a couple of points on both and with regard to your numbers. The margins, they saw some kind of compression. What is the outlook with regard to margins? And also importantly, ferrochrome prices are a little bit softish. It could be a seasonal factor because of what's going on in China. But how much lower are ferrochrome prices today in comparison to your quarter 3 averages?
So, clearly what is happening in the commodity sector in general, metals in particular, and ferrochrome is no exception. That prices are soft, that is on account of global conflicts, of demand worldwide being subdued. And of course, economic data coming out of China is not very hot at all. And let me straight out acknowledge something that in one of our earlier interactions, I had said that we expect H2 to be better. And that was basis the assumption that the stimulus measures being put out by China would stabilize their economy, and cause it to grow, which has not really panned out in that manner. So what you're seeing at the moment in Q3 is soft prices compared to a year ago. We're about 10,000 rupees a ton lower in terms of realizations. That is clearly translating into the softer margins that you see. And actually, the worst, if I can put it, is December, January, and February, because the Chinese monthly prices have gone down to about 75 cents, which translates to 87,000 rupees a ton in India with the new exchange rate. And that's simply not workable for most players. In our case, as you know, we have the advantage of backward integration. We have the advantage of a debt-free balance sheet. And that is what has helped us, report a decent set of numbers. As far as the ongoing quarter is concerned, we will see a little bit of a contraction for the simple reason that in Q3, you saw the lower prices being there for 1 quarter. In Q4, you are seeing it. You will see it for 2 months, which is January and February. But I think this is the worst, if I can put it that way, because it is simply not workable. Although prices in India are higher than that, but it's still below the variable cost of most producers, not us, of course. It's below the variable cost of most producers, which is why you're seeing lots of cutbacks of production. And this is simply an untenable situation. And Nigel, the one thing I wanted to point out is if we go back about 6 to 7 years, in a similar sort of an environment, IMFA had swung into a loss in Q4. But today we are in a very strong position where even though in Q4 we will see a slight contraction, but it will still be a healthy profit. And what used to happen earlier is the sector used to be in distress when we hit 10 to 12% EBITDA margin. Today, because of our stronger balance sheet, the sector goes into distress when we are at 16 to 17% EBITDA margin. So, I only see upside from here on in terms of Q1 and Q2 of the next financial year.
All right, we take that point, and I'm sure the street very well understands the cyclical nature of this business and your outperformance in that as well. Just a final question before we let you go, Mr. Panda. The chrome ore situation in South Africa, I mean, is it still challenging or has it improved? What's your comment here?
So actually, more than the chrome ore situation, Mangalam, I think it is the power situation that one needs to keep an eye on, because South Africa has become a high-cost economy for ferrochrome, where power tariffs are in the 650 to 7 rupees per unit range, which is unbelievable. If you looked at it 10 or 15 years ago, if somebody had told me this, I wouldn't have believed it. And Eskom, which is the state utility, has proposed a 36% increase in power tariffs, which is under consideration. But even if that is cut down by 50%, it's still a huge power increase. So that's a huge tariff increase. So that's that is something which is providing a base to how low ferrochrome prices can go. And yes, chrome ore transportation remains a concern because of their own inland logistics costs, the fact that they're exporting out of Mozambique, etc. So all of this, when you have a major producer like South Africa sort of moving into a high cost zone, when you have China, which is the world's largest producer, being relatively high cost because they import all the chrome ore, then for a fully integrated producer like us, as I said, you can look at us as a glass half full or glass half empty. Certainly half empty if you're looking at slight contraction. But I've always said, IMFA cannot be viewed on the basis of 1 or 2 quarters. It has to be a long-term view. Growth is what we are pursuing. Growth is what we'll get to. And certainly, I see it at not just half full, but much more positive than that. Leaving aside the immediate ongoing quarter or something of that sort.
All right, thanks a lot for that, Mr. Panda. Appreciate you joining in and giving us all of those details. Wishing you all the best. Look forward to chatting up with you soon. Well, on that note, we'll have to wrap up on Chartbusters with news that the Nifty Bank has seen a sharp slide, but you stay with us. Trading Hour comes up next.